What's up, guys? Ricky here, ready to do my Sunday prep. Hope you guys had a great weekend. Quick shameless Cat and Cloud coffee plug. Yeah, Cat and Cloud, check them out if you guys enjoy good coffee, like the real stuff, not none of that uh, dookie water from Starbucks. Check out Cat and Cloud. That's where the good stuff's at. Uh, Coffee, yeah, it's an important part of my morning every single morning, and that's because I'm very routine based, and I actually think there's a lot about being a good trader that comes from being very routine. Um, I actually am probably borderline OCD with how routine I am. Like my routines have routines. Like the way I make my espresso in the morning, everything has to be done a certain way. The way my morning unfolds, everything has to happen a certain way. And when you have these kinds of routines, what you're actually doing is saving mental capacity, right? Because you're making less decisions. I know they might seem like small ones, but it adds up. And we need our brains on point as soon as that morning bell rings, right? So routines, gotta have them, guys. We had a short week last week, and it's funny because even though there was only 4 days, it was still enough time to see people get upside down, inside out, busted up on a few different names, right? We had whether it was like NEGG, CARV, or SGOC was on Friday. And it was both short and the long sides. And I mean, the only thing I can say is that if, in my opinion, this had to have been some mixture of over eagerness, stubbornness, and just a lack of risk management, guys. So you know, occasionally you're gonna see me put those kinds of names on a Sunday prep, but by and large, most of the time you're gonna notice that my Sunday preps are quote unquote boring names, right? That's not an accident. I actually want to kind of help you guys learn that you don't always have to trade the hot flavor of the day stocks. There's, thousands of stocks out there, and you know, as long as it has range, as long as it has the liquidity, it's going to offer you opportunity. You don't need to be involved with what everyone else is trading. Most of the time, those end up being the ones that have the bigger headaches involved with them, right? So I want to encourage you guys to kind of expand your field of view when it comes to picking the stocks you trade. Especially if you're a newer trader, I actually, would argue that when you're learning, it's a lot easier to take a 1 point move on a $20 stock than it is to take a 10-cent move on a $2 stock. And it's not that it's not doable. It's completely doable in either situation, but it's way easier to get upside down or be on the wrong side of that trade on the $2 stock because it can move against you in the blink of an eye. And what happens is when you're a newer trader, it's very easy to freeze up like a deer in the headlights, and you end up all of a sudden you're put in a position where like you're down more than you expected. Instead of cutting it, you're going to add to a loser, and before you know it, this loss balloons. Whereas the $20 stock is going to be a lot more forgiving in terms of the warning signs that you're on the wrong side of the trade, and giving you that cushion to get out of the trade before it really balloons out of control. Now it's funny, right? Because you guys know I trade small caps a lot, and there's actually a lot of things I absolutely love about them. But I am also very cognizant at all times of how quickly things can turn, right? So the reason I allow myself to be involved in those trades is always going to circle back around to the fact that I know that my risk management is airtight and that I'm not going to get stubborn and fight something. And yes, I'm human. It happens from time to time, but not very often. I'm pretty proud of myself in the way I trade when it comes to admitting wrong and just getting out of a trade, regardless if the loss sucks to take. It's always live to fight another day. Capital preservation is rule number one. So that's just kind of the notes I wanted to touch on before we get into the actual scan. And as always, guys, little housekeeping. I'm not a registered broker dealer, neither is True Trader. Nothing that we talk about on the preps is an solicitation of buy or sell a stock. Um, Trading markets is risky, and we have to acknowledge those risks that are inherent in the markets and take full responsibility for them. So everything I talk about, guys, just information and educational purposes only. So now that we got that out of the way, let's get into the prep. As always, guys, we're going to start with the broader markets, the ES. So I use the ES. I talked about this last week, guys. I prefer it over the SPY because it's less of a gappy chart. But last week, we saw it pull back exactly to where we talked about, right? The 20-day, there was a pivot down there too. And the thing is it bounced almost immediately, just straight up. So yes, the uptrend's intact, but my notes that I've written down about it is that I really honestly would prefer to see this, when it pulls back to support, find a base for a little bit longer than just an hour or two, right? Like, can we just base for a few days and go sideways and start to build some real support as opposed to just flushing down and bouncing straight back up, right? Regardless, the levels are going to be quite the same from last week, right? That 4,400 level on the ES is what I'm looking for as the first area of resistance. Now, if we blow through that and we just keep extending, then I'm just going to be watching. I'm going to be looking at all times for lower highs and then some lower lows, because as we extend and get further away from the 20-day, again, I'm going to be more focused on fades than I am longs. I'm definitely not going to be starting any new long positions when we're extended like that, because you have to understand, when we get extended, it's going to be natural to roll back over and come and test support. That's where we want to be looking for long setups. Now, if we flush and roll over and come back down to the 20-day, there's obviously the 20-day. The next level is the 50-day. There's some other levels down in those areas. That is where, when we do that, or if we do that, that is where I would be looking to the long side on strong names, right? So the NQ, same thing, guys. NQ didn't even quite retrace to the 20-day. And I mean, it had the same type of bounce. The notes I've made about the NQ, though, is that this uptrend is becoming very, very mechanical. Like, this is, you know, in my opinion, what I want to happen on something like the NQ is I need this to either speed up and go more parabolic, or I need it to really flush out and roll over. Because right now, it's just mechanical, right? It's just, you know, a very continuous, every dip is bought at the same trend line, every pop is sold at the same trend line. I don't really have an edge. I need something to roll over and flush out in order to have an edge. Or I need it to speed up and go parabolic to try to fade things, right, that are extended. The levels I'm looking for on it is probably that 1400 area. I mean, the 20-day is currently what, 14,381. Yeah, it would be nice to touch the 20-day, but I think it needs more. I would really prefer to see it come down to like that 14K level, and if not even further, towards that 50-day. So those are the notes for the tech sector. Bitcoin, again, honestly, it's gonna start to sound like a broken record, but it's exactly what I want to see happen here is just this sideways action. And so if you're looking at the blog post, it's the written version of this Sunday prep, you're seeing this chart, right? The weekly. I threw the weekly in there to illustrate how we finally have the weekly 20 rolling over, and we still have the weekly 50 kind of pushing up. And right, what I think needs to happen is for price to just kind of stay between these two moving averages. Any pushes up, I want to see it kind of maybe test that and roll back over and just continue sideways until these two SMAs kind of get much closer, right? I would like to see them converge. I'm not sure if that happens, but as this comes down and as this comes up, as long as price goes sideways, these two should meet up in, you know, I don't know, maybe a few weeks from now. If that happens, if these converge and we're still kind of in between them, then I think then is when I think a healthy move out of the base can happen. And I think at that point, the move out of the base, whether it's up or down, can actually have some follow through and be substantial. So that's what I'm looking for on the cryptocurrency space. And remember, guys, I don't trade Bitcoin, but I use these as an index, right? I want to know what Bitcoin's doing because I trade equities that are crypto related. So the next thing is always the industry rankings. As last week I told you guys about a bar chart is what I've been using because it's free. Now I do have a paid subscription to it as well. So like I have some features on here which are pretty neat that I'll get into a little bit. One of them was, you know, once you have these sectors, like let's say here's oil exploration and product, right? I can click on it and we can look at all the components of that sector, of this industry. And the cool thing about that is, right, like, so the way we use industry strength or weakness is to know if institutional money is flowing in or if they're kind of hands off. So if, for instance, you'll see some names, like the first name on the strong stocks looking for continuation this week is BTU. We'll get into that in a little bit, but it's from a strong sector, right? And so one of the cool things about bar chart is being able to run a screen, meaning like look through stocks that all fit a certain criteria, right? A screener, just like people use FinViz for it. I use FinViz as well. But with this, I'm able to use it where I filter by sector. So it's really neat being able to go, look, I want to look for stocks that fit this criteria, but are also part of these sectors, which is great when you want to use sector strength or weakness to find certain setups. So here's the, these are the strong ones. And then if we resort it by this, you can see the stocks or the sectors that are relatively weak. So that's that in a nutshell. Now let's get into the scan, which is the first thing is, like I said, is BTU, which is part of the strong stocks looking for continuation. BTU right here. So, guys, this chart, God, I wish I had seen this. Not that I didn't see it. We traded this. We traded this back in here, but I just wish I had zoomed out and paid more attention to like the bigger view on this, because I really think this stock looks like it could be gearing up for a much bigger move, right? If we look at the weekly chart, check out the volume build, right? This is really kind of it had a nice base, and we have really started to kind of break out of that base. And the volume is following through with it, right? So as the volume grows, it means so is the interest, the money is coming in. And so you see I have 3 levels marked here. We have the recent breakout area around 10, 950 to 10. I've got this little base area right around the 20-day, and then obviously this trend line down here, which is a retest of this 5 level. I don't think we're going down there. If we did, I think I would be definitely looking to build into that for a bigger swing. Now, the way I'm going to play this week is this first level. I will buy an emotional flush into it, 950 to 10. But with that level, I'm really kind of looking for a day trade, and I'm looking for, I want the flush to be emotional, right? I want to see some people kind of like realize maybe they bought it a little too high and panic out, flush them out. Let me get my initial starter on and see if it starts to work. And the way I would treat it is, if it were to close strong, I would have locked in plenty of the day trade profit. I may leave a piece on for a swing, but I'm not going to be extremely excited about a swing with a 10 average on it. I'd much rather see this roll over to the 20-day, and at that point, if we were to come down to the 20-day, so let's do this sequentially, right? If it comes down to 950 to 10 and I'm buying, I'm going to have my risk management rules in place where, yes, there will be a point where I'm wrong in the trade if it rolls over further and I'm stopping out. I would take a paper cut on it gladly in order to get that 20-day. So then we come down to the 20-day, I'm buying it again. Maybe it happens in a few days. It doesn't necessarily have to happen tomorrow. And at that point, if I get the 850 area, I'm putting a piece on for a swing. But I'm also going to probably have some day trade position on as well. Now the swing, if it were to roll over further, at that point, that swing's not coming off. I would be ready to add at the 50-day down there around 7. And I would probably be using under this 676 as my risk. And then obviously if we were to come down further to this 5 level, that's a different trade, but that would be, I'm throwing some in the SEP account and some longer term positions on it. But I love this chart, guys. I think BTU's got a beautiful look to it. I think the volume is there to support the move, and I'm looking forward to seeing what it brings this week. So the next stock on the list was FSLR. Now, FSLR it's obviously a solar name, so we got to follow the solar sector as we play it. Make sure if you trade the solars, you have TAN up so you can see what the whole sector overall is doing. And you can also, you don't necessarily have to trade FSLR. If you like JKS better, it's got this a very similar setup. But I like FSLR. I like the way it flushed down too close to the 200-day, and you get this nice hammer candle down here, and it looks very bullish, and it's already pushing back up. So the way I'm going to trade it is there's two different ways I may play this, right? If it flushes out during the week and comes back down to test that 85, 86 level, I'll buy against this Thursday low, and possibly be. It just depends how it gets there. If it were to flush down there emotionally, I'm putting it on, risking that low. If it were to just kind of like roll over slowly and meander down there, I may just build into a position and know that it may want to touch the 20-day. Again, it's an if-then statement. All these ideas are always going to be if-then statements, right? Now, the other way to play it for me personally is if it breaks back over this 95 level, I'm going to be looking to buy dips and join trend on this name, because I really think that's an important level. If we get over that, we can really start to move. Again, that type of trade could be one of those ones where it's possibly part day trade, lock in profit. If we close strong, maybe look to swing a piece. I think the solar sector's really kind of changed the way things looked over the last few months, right? It definitely, the sector had some weakness in it for a while after the election. It was one of those the election was kind of like a buy the rumor, sell the news type thing. Everybody was assuming Biden was going to get elected. They buy it into the election. He gets elected, and the sector rolled over, right? So it was just a sell the news event. But things have changed. It's looking healthy again as a sector overall. So I am willing to get involved if some of these names start to light up. So the next section, guys, is the oversold reversion setups, mean reversion type things. There's only one name I have on my list for this week, and that's WYNN. I pointed this out, I think Wednesday or Thursday on Twitter, and I was hoping for 107, 108. We didn't get there. It started to bounce. It's reclaimed the 200-day, and this is going to be one of those situations where if it doesn't come down lower to like the levels I want, I need 107, 108 to even start to get involved. That actually comes from the weekly and the monthly, guys. So you see the weekly 50 SMAs, 107.29 currently. Monday morning when the market opens, this will be a little bit higher. I'm not sure what it will be, but that's where that level comes from. And then the monthly, you see we have the 200-day, or not 200-day, 200 monthly is 108.50. So that's why I want those levels to begin in. So the reason I'm pointing that out is because if it doesn't come down there, this is a situation where I'm just going to miss the trade. And guess what? That's okay. I put in the notes that it's much better to wish you were in a trade than to wish you weren't. I can't tell you how many times that has held true in my career. And I've talked to many traders that, one of their biggest issues is when they're in a trade that they're like, man, I don't know why I put this on. Now I'm dealing with being in a trade I wish I wasn't, as opposed to just being sidelines and going, man, it sucks that I missed that. So that's the only one in here for that setup. Now, I know people are probably like, but Ricky, what about this QFIN? No, it's Chinese. I'm not messing with these Chinese names right now as far as anything where I want to get involved, because there's so much potential for headline risk on the Chinese stuff. So I'm just kind of staying hands off with the Chinese stuff. So yes, I see this chart. No, I'm not getting involved, guys. So now on to the short setups. Weak stocks, looking for continuation. There's only one I have, is GDS. Now, again, it's another one of those ones where maybe this does not come to fruition at all. I don't know. Maybe it continues lower without me. The only way I'm getting involved in this is if we get a spike up into the 50, 20-day area. An emotional pop back into those levels, I would look to fade. And it's only for a day trade. This is not looking to swing this. But a big spike into those resistance areas, and I think it offers a nice, quick, easy fade for a day trade. Let's see. The last section is the overbought reversion. And there's only one name on that one for this week, and that's Costco. And again, she's not there yet. She's not there yet. I need higher. I'm looking for 420 to 425 without a pullback, without a pause. This move, I want to see this move get there Monday, okay? I want it tomorrow. If it happens, great. I might be able to put something on and look for some lower highs and some lower lows and watch for it to roll over and offer a quick day trade. If it doesn't happen tomorrow, that means that it either pulled back ahead of it or it went sideways. In either case, That's not offering me the emotion that I need in the move to feel like I have an edge. And that's how these. Hopefully, you guys understand that by now. Is that when it's an oversold or overbought reversion setup, the edge comes from the emotion in the move. When something gets sold off so fast and so hard, eventually the sellers exhaust, the buyers step in, and you get a bounce. Same with the parabolic move. At a certain point, you squeeze all the shorts out, the buyers exhaust, and you get something that rolls back over. If it doesn't have the emotion, you have no edge. So this needs to really have that push that gets it to where it has more of an emotional look. I'm hoping it happens. It might not. The only other name that was almost on the list this week was Oracle, and again, you see it had this pullback here. So like this would have to really continue further up for it to make my list. And it is just kind of breaking out back over these levels here. Yes, it looks like it could offer an emotional trade, or not an emotional trade, a nice retrace, but it's just not A plus for me. So that's the reason Oracle didn't make the list, guys. Now I do actually have what I consider like special situation. It's not really special situation, I guess, on this name, but XELA. I am actually watching it this week. I watched it all last week. And I traded it, right? Because the volume, right? Whenever there's liquidity, I'm willing to put some money at risk when I see setups, because I can get in and out. You don't have to worry too much about these giant low volume moves that happen on swipes, right? So the reason I'm looking at XELA is it may not happen. So these two moves, Thursday and Friday, right? So both days had SSR. This move into the close on Thursday was extremely heavy, like really heavy. There was a lot of heavy selling happening right there. And this one obviously was not quite as much of a capitulation as it was on Thursday, but again, it was heavy selling. Like I was watching it, and obviously you can see the volume too. On both those moves, lots of selling. So if this does not roll over, I actually feel like this was either manufactured to, one, shake out longs, and two, pull in more shorts, right? Make it look weak. The only way I want to get involved is if we get back above Friday's highs. I think what we're going to see is some shorts that maybe carried this over having to either come to grips with stopping out and being disciplined with their risk management, or deciding whether or not they want to go to war with this thing, because I feel like over Friday's highs, and this thing might actually start squeezing, and there is certain things in the filings that suggest that there might be a reason for them to take this well into the 4s, maybe 5. So that's what I'd be looking for on XELA. If it doesn't happen, it doesn't happen. It's not a big deal. And that's how I feel about all these trades. You guys have to understand one thing. You're going to see these Sunday preps, and you're always going to go, wow, man, that most of his stuff didn't even come close to the levels he was looking at. I don't care. I find trades throughout the week. This is just the Sunday prep where I prepare for my week. I never marry an idea. I never feel like any single idea has to be a trade I'm in, right? Like I never want to feel that way about any single trade. I always tell people in True Trader and people that I talk to outside of the community, right, that I look back over the last few years of my career, and like you start to see the bigger picture, and that is thousands and thousands of trades, right? So why should any one trade matter that much? Yes, it's nice to have a trade that is a career builder or whatever, or a home run, but there never has to be a trade that it's that meaningful to you that you just have to be in it. So keep that in mind, guys. If these trades don't play out, if they don't come to fruition, not a big deal. But be prepared for it. Come to the market with your game face. I'll see you guys tomorrow. Let's get it. Peace.